So, as a business owner or a real estate professional, those lunches that you have with your clients, or coffee meetings, or dinners that you may have with potential clients, the IRS allows you to deduct the expenses that are associated with those meals. But it has to be done the right way. If you do not follow the rules, you may lose that deduction really quickly. So, let's talk about how it works. My name is Keisha Randino. I am a real estate and business CPA and tax strategist. I help you save on taxes, keep more of the money you make, and build wealth in your business and your investments. So let's get into it. Business owners eat all the time, and some of those meals can actually be deductible for you. First, let's talk about what's considered to be a qualified meal. Not every meal that you have is going to be considered a business meal. I know sometimes I wish it worked that way, but the IRS does have rules that's associated with it. It usually means that you're meeting with the client, a potential client, a business partner, a colleague, or someone that you are discussing business with. Think about the times that you grab lunch with your client or you grab coffee with your marketing manager. Those are the type of meetings that the IRS says, you know what, you can deduct these. But the part that many people get stuck on is the documentation. You can't just swipe your card at a restaurant and call it a business meal. The IRS does expect you to keep some basic records. So when you do have a business meal, you want to document who you met with, the business that you discussed, the dates that you had the meal, and the location that you had the meal at. It can be a simple note in your phone. It can be in your accounting software, but you do have to have that documentation to explain the business purpose of the meal. Another mistake I see is that I see business owners that try to deduct every single meal that they have. If they have lunch by themselves, it's typically not deductible. But lunch with the clients that you're discussing a deal or expanding their company, that's exactly what the IRS considers to be business purposes. So when you have all of your documentation and you know exactly what your meals were, you're going to include them on your tax filing. When you include them, you can deduct 50% of what the total meal is. So if you spend $100 on a qualifying business meal, then you can deduct $50 of that. It's not a full meal deduction, but it does add up over time. So if you're consistently having business meetings with clients or with potential clients, it does add up and it does give you a benefit at the end of the year. So the big picture is that when you're running a business, it's not just about making money. It's more about understanding the tax rules that allows you to really keep more of what you make. I've noticed over the past couple of years that the IRS selects meals quite often in order to do audits on. And no matter how hard people try, if they don't have the documentation showing that it was a qualified business meal, the IRS is disallowing it. So if you don't want to have them disallow expenses and you want to make sure that you are getting the best benefit, keep track, have your documentation in place so when they ask, you can produce it to them. So that's it. Next time that you have lunch with a client or you may have dinner with a potential client, remember that conversation could actually be helping you in more ways than one. It can be helping you save on taxes. So if you need help sorting out what's considered to be a business meal, what's not a business meal, use the link in the description box below to schedule a call with my team, and we would love to be able to help you. Make sure you like and subscribe, and I look forward to seeing you in the next video. Bye.